Hi everyone, and welcome back to another episode of the FEX Insights podcast, brought to you by FEX Global. In this episode, we're going to be covering the latest in the news from around the world of blockchain that we've been seeing, especially on the local front, but definitely things that are important for our viewers. First up, we've got Redbelly in the news. Let's head on over to this article that they put out this week, which is on why security and finality matters for tokenized assets. And as you can see here, they've got this really interesting quote: security and finality are not optional features. They are foundational in capital markets. A delay or ambiguity in settlement can have systemic consequences. Tokenized assets, especially in a regulated environment, must operate on infrastructure that guarantees deterministic outcomes and mitigates custody risk. So deterministic, you can rely on it. A lot of what people don't realize is that there's a lot of probability when it comes to how transactions settle, what they call finality. And if it's based on probability, there is that chance for rollbacks. So really important to highlight that here. They talk about custody providers like Fireblocks in the research-driven experimentation that is going on right now, especially with Project Acacia, and how this helps ensure that infrastructure is not only performant, but also aligned with institutional security standards. So the importance of finality is highlighted there in this article, and you'll see that in the show notes. Another one to highlight is that Redbelly also released their latest white paper. So if you went to their website, just like many other token projects there, in this case, it is Redbelly themselves with their RBNT token. They've also got the white paper that relates to that. If you didn't know, they came out of in terms of the work that they've got and what they've created as a network is research that's come from the University of Sydney, thanks to Professor Vincent Romoli, who also works with Redbelly, and also the CSIRO. So when that research was created on things like the Democratic Byzantine Fault Tolerance, the DFT, basically the algorithms that run Redbelly, all of that kind of stuff was academic research first. A lot of continued studies into that. White papers created, and after a few years, you can see that it's been updated here. So we go through that in this Twitter post. So you can see that they've highlighted the new white paper is live. There's been some community members of Redbelly highlighting and sharing their thoughts on that. It's got AI-ready infrastructure. AI agents can now automate KYC, AML, policy enforcement, and investor onboarding directly on chain. So more towards that automation that is absolutely able to be done thanks to blockchain technology is there, especially for AI infrastructure. So really important. That was one of the highlights, the key highlights. And also BTC liquidity meets RWA, so a native Bitcoin bridge with threshold signatures, and how that unlocks the world's deepest pool of liquidity, i.e. Bitcoin. BTC can now become productive collateral for RWA issuers and secondary markets and staking to secure key network services. So keep an eye out on that one there, because there's going to be further work. So it always starts off with the academic research, turns into white paper, and then we actually start to see the capabilities coming out in the products. So for those that are looking towards what is happening with the future of chains like Redbelly, then this is certainly a key indicator as to where they're heading. Also in Redbelly news, we had the latest Insights episode that came out last week. And that was with myself and my colleague that you've also seen on this show, Arturo Rodriguez of NotCentralised. In that episode, we went through a little bit more to do with Project Acacia. If you missed it in previous episodes here, and in things that we do for Redbelly, you would have seen that we were announced, NotCentralised was, as a lead participant in Project Acacia. That's the next level of testing by the Reserve Bank of Australia in conjunction with the Digital Finance CRC. And that is to test wholesale tokenized assets and how the RBA and other services provide support for such a world where the future of finance is here, especially in Australia. And what we saw there was that the other projects were announced. And then we also went through, and you'll see it later in the news, just more about what we're doing in this particular project pilot. So we spoke about that on the Redbelly Insights show. So we spoke about it, and Arturo coined this. It was like being invited to the Olympics. So there's all the work that you do beforehand, but it just gets you a ticket to the Olympics. It doesn't mean that you've actually won any medals yet or that you've competed. So you've done all that hard work to prepare, and now it's time to actually put your wares out on show and compete. So it's going to be really interesting stuff to see what gets done there, how we're going to showcase that. More on our use case is going to be there later in this show. What you can see we spoke about in that episode, from receivables to unified ledgers that open emerging capital markets, composability, redefining collateral and liquidity, slashing the cost of capital for businesses. Really important stuff there because it's all about efficiency. Retail participation as a jobs and growth story, which it really is, and seamless cross-jurisdictional flows of tokenized assets. So all of these sorts of things that get unlocked beyond just the securitization pilot that we're doing as part of Project Acacia. And you can see here the AMA page of Redbelly, the latest one that they had. So that was episode 13. That's MetaWealth. The week before, we also had episode 12, which is Arturo and I going through that. You can click watch now and that will pop up. You can see this on Twitter, on YouTube, and on LinkedIn as well. And yeah, you'll be able to play that and watch. So you can see yours truly there. I've just got the volume off, but you'll be able to see that Arturo and I having that conversation. So a lot of insights, a lot of really great stuff there, and I hope you get to check it out. Next in the news is this article by OneSafe on the tokenization of real-world assets, reimagining finance in 2025. So you can see the article here, decoding real-world assets, the intricacies of tokenization, trends and insights into the RWA market, taming reg hurdles, cultivating transparency and trust, and a glimpse into the future of tokenization. So some really cool stuff there. You can check out that article. I just wanted to highlight how it talks about things like the fact that there's stablecoins that are dominating the landscape today, but are expected to decline as a relative share of diversified tokenized assets. So the more that the crypto space has these tokenized different assets, whether it's stocks, it's real estate, like we spoke about on the Redbelly show with MetaWealth, or securitization, all of the tokenization type work will outstrip and outpace the flippening, as they call it in crypto, will outpace what is going on in the stablecoin world. We'll definitely still need stablecoins, but in terms of what dominates, it's reckoned that it will be tokenization of various things that will. They also talk about major incumbent players like Bank of America, Citi, BlackRock, Coinbase are all actively exploring the launching of tokenized offerings. So key to keep an eye out on that sort of stuff in this article here. Next up, if you've been keeping an eye out for what is going on in the regulatory space, you would have seen a lot of positiveness coming out of the US. And hopefully, as the old adage goes, if the US sneezes, everyone else gets a cold. And I think that Australia, well, I hope that it does here, but we see the Genius Act here, which stands for Guiding and Establishing National Innovation for US Stablecoins Act, hence Genius. And this is a Wikipedia page covering what is going on there. There's a whole bunch of links, but in general, it's a federal framework for stablecoins with strict one-to-one backing by US dollars of all low-risk assets and monthly reserve disclosures, dual federal state supervision over stablecoin issuers, and it's intended to boost credibility and trust, seen as foundational for tokenizing real-world assets. So really interesting on the stablecoin side of things. On the other side, we've also got the Clarity Act. And as I go over to it here, you can see this Cointelegraph article, which has the Clarity Act explained, what it is, some more details about that. They talk about how it defines digital assets clearly. It splits the oversight, importantly, between the SEC and the CFTC. So over here in Australia, we have ASIC, which takes care of all of it together. But in terms of commodities and equities, fixed income, other assets, it's split between the SEC and CFTC. It creates investment contract assets. It requires crypto businesses to register with the CFTC or risk penalties, but allows limited fundraising without SEC restrictions. So there's a certain level higher that you can go before you actually need to have various licenses. It defines what mature blockchain systems are, which is important. It's considered mature if no single person or group controls it, enabling lighter regulation. Humans are the weak point in all of this. So whether it's AI that we talk about or it's blockchain, when it's programmatic and it can be seen and it's transparent and you can trust it, and there's various levels of that, then certainly it requires lighter regulation. So really interesting stuff. And we're glad, as being advocates for, regardless of whatever your political views are, as advocates for the technology, this is definitely seen as a technology positive move. So more on that in this Wikipedia and Cointelegraph articles. Next up is this article from Investopedia, and what we can see here is that Goldman Sachs, BNY Mellon, and others are stepping into tokenized money market funds. Really interesting stuff. As part of Project Acacia, we spoke about it being part CBDC, wholesale tokenized assets, money market funds, and more. BNY Mellon and Goldman Sachs took steps toward a more tokenized future on Wednesday. The companies are letting some investors access tokenized money market funds through a BNY platform, but it's using Goldman's private blockchain. That's interesting. We'll see whether the private blockchains are the ones that work, or if they go towards something later on where it's maybe a private part of a public blockchain like JP Morgan did a few years ago. BlackRock, BNY Investments, Dreyfus, Federated Hermes, Fidelity Investments, and Goldman Sachs are participating in the launch as well. So you can see some of the nation's oldest banks being part of all of this kind of stuff, this movement towards better rails, better assets, just like when all of the financial markets started getting digitized, exchanges started getting digitized. It used to be something called open outcry, but we evolved. We move towards efficiency, and that's what this is all about. So great to see. We'll keep an eye out for this one. You can check out the article here. Another thing to highlight was this FinTech Weekly article, which talks about when crypto becomes infrastructure, what institutional adoption really means. And as you can see from the article here, they talk about crypto integration, the end of the beginning. Nice play on words there. Over the past year, they talk about digital assets beginning to shed the narratives that once used to define them. Scams, a whole lot of the FUD, the fear, uncertainty, and doubt. Crypto is no longer positioned only as a rebellion, disruption, or alternative for an increasing number of institutions and policymakers. It's now infrastructure, and we're starting to see that more and more. Project Acacia, again, that is part of the testing. We need to test, we need to prove, we need to trust, verify, obviously, because it's blockchain, and then we'll be able to move forward and actually start using this kind of stuff. So really interesting to see it being mirrored around the world, and hopefully a lot of those insights come back here. They talk about policy as permission. The current wave of institutional participation hasn't emerged spontaneously. It follows a regulatory shift that, while uneven, has introduced a form of conditional clarity. In the US, we saw 11 spot Bitcoin ETFs approved in 2024, and the Genius and Clarity Act spoken about. They also speak about market behavior following the structure in this article, and then the role of fintech and the quiet build-out. I've done a lot of talks in the AI space as well, and it really is the quiet middle. There's a lot of fear on one side, overhype on the other, but the quiet middle, away from the noise, is where the real progress starts to happen, and it's happening with the whole blockchain space as well. So really interesting to see. Well worth to dive into in this article. And in other news, we see something from across the pond with this ex-Jefferies trader, Zhang, launching a $70 million crypto hedge fund. So a former Jefferies trader is kicking off a crypto hedge fund as an in-store investor as the asset class interest grows. So you can see more of that in this financial news article. Better if you have a subscription. The next article here is from the AP, and it talks about the risks and rewards of tokenization as crypto heavyweights push for it. As you can see here, they've got an image of when Robinhood listed on the NASDAQ a few years ago in 2021. And they talk about as cryptocurrencies become more intertwined with the traditional financial system, industry heavyweights are racing for a long-sought goal of turning real-world assets into digital tokens. It's what many are all about in the tokenization space and what we've mentioned in other articles and previous episodes. Tokenization is going to open the door for a massive trading revolution, said Vlad Tenev, the CEO of the trading platform Robinhood, at a recent James Bond-themed tokenization launch event in the south of France. So yeah, if they're going to put stuff on like that, there's definitely a lot of money behind that. They talk about what is tokenization here and the basic idea of using blockchain technology that powers cryptocurrencies to create digital tokens as standards for things like bonds, real estate, or even fractional ownership of a piece of art. This sort of stuff, especially on the bond side, is what some of the different participants are doing in Project Acacia, again, bringing it back home here to Australia. So it's nice to see the mirroring effect happening across the globe. You can see mentioning a bit growing momentum. Robinhood is definitely at the forefront of tokenizing stocks, although there are critiques as to whether it is enough that you just have these as IOUs, or is there more that is needed for that. Talks about crypto's golden age, which certainly makes sense given that Bitcoin is at all-time highs, 123,000 as of Monday. And then the Trump bump, so the support that's happened and the increase because of the new president. Is it legal? Securities laws can definitely be complex, and even defining what a security is, even before crypto, was a hotly debated question, especially in crypto, as it says here. So we can see more of that. All eyes on private companies and what they're doing, and just an awareness to be careful. So you can check that out in this AP article here. Next up, I wanted to share this blog here from the group at CoinLaw. So you can see here cryptocurrency adoption by institutional investors statistics 2025. How institutional investors are embracing digital assets. And in this report, you've got some key takeaways here, which is always great. Nice to have a TLDR, especially when there's so much content out there. 732 million people globally now own cryptocurrency, making up 13% of the 5.6 billion internet users worldwide. Interesting stuff. 71% of Insto investors have now invested in digital assets as of mid-2025. 41% of Insto investors hold spot cryptocurrencies, while 46% plan to invest in vehicles owning underlying crypto assets within the next 2 to 3 years. And then 96% of institutional investors believe in the long-term value of blockchain and digital assets. All very supportive stuff. They highlight here institutional crypto adoption from current portfolio positioning. So more details there about wealth managers and Insto managers, what they're holding in terms of equities, fixed income, cash allocation. Some nice charts, as you can see here as well. Digital asset allocation trends are also shown comparing 2024 to 2025, and we see growth across all of these different figures. And then we also see respondents overwhelmingly planning to increase their digital asset allocations in 2025. We see that with anecdotal news. It is great to see it all pieced together in a report like this. Top reasons for investing in digital assets include 59% highlighting that there's higher returns than other asset classes. That is a no-brainer, especially at the moment, but definitely DYOR. You've got to check all of that work there. It is a volatile kind of thing, just like with many startup technology and new emerging kind of tech. So that's their investment in innovative technology is another cited reason, as well as viewing digital assets as a hedge against inflation. Although it is interesting, it could be a hedge against inflation, but there is also what used to be seen as it was a hedge against the trends of the existing markets. But now that we've seen BTC, ETH, and many others that are trading like BTC and ETH, they are very well correlated with tech for risk on assets. So worth a look at anyway. Growth in institutional investments is also highlighted here with more charts, stablecoins dominating everything, Bitcoin a little bit further down, Ethereum and altcoins after that. It'll be interesting to see when we start looking at blockchain technology and the tokens that are behind that more as tokens or investments into infrastructure like Azure, like Google or Amazon. So it'll be interesting to see how that changes. There's more in this report here, a whole lot more charts and a lot of takeaways. So well worth looking at. Thanks to CoinLaw. Finally, I just wanted to highlight, and we've shared this here before on the FEX Global Insights podcast. This is the version of a website that we created at NotCentralised, which showcases what we are doing in terms of securitisation, our pilot project for Project Acacia. This is reimagining financial infrastructure with digital money. As you can see here, you can see all of the details on the overview page. We're going to add more to that. But for now, what you can do is see the different participants, what we're doing, our role in the pilot. You can see Redbelly Network there, what they are doing as the blockchain infrastructure layer. You can also see paid, the construction of receivables in originator, AMAL trustees, sub-trust manager for the invoice pool, Perpetual, the trustee for the bond issuance. So trustees are involved here. This is real stuff, folks. Australian Bond Exchange, ABE, is mentioned here. They're the marketplace for tokenized ABS. There is Fireblocks as well, who do custody and secure digital asset operations, and Fasanara Capital, who are the buyers. They are the institutional investor backing the pilot. So really interesting to see. And we also show the workflows. So all the different steps from invoice creation, transferring things to trust, asset pool formation, the bond structuring with Perpetual there, bond issuance, and then market listing on the Australian Bond Exchange, Fasanara Capital coming in at the investment step, and then the invoice repayment. So it is the entire life cycle. So it was great to test in the CBDC pilot of 2023 with the RBA and DFCRC how we could do construction and invoice financing where you have digital escrows and also having zero knowledge proofs, because typically crypto, as soon as you and I have done a deal, then we can see each other's wallets. That doesn't work and doesn't provide commercial confidentiality. So having zero knowledge proofs over the top of that, things have evolved further such that we can now have something very similar to that, where we can take much more steps in terms of piecing together the entire value chain. In this case, this is for securitization. As you click on each of these tiles here, what it shows you is the traditional process. In this case, invoice creation, where invoices used to be created, or still are, can be manual through traditional accounting software, stored in databases, sent by email or postal mail even. Crazy, right? Verification requires manual checks, phone calls, physical document handling. This process is slow, error-prone, and lacks real-time visibility. So why blockchain? How does blockchain transform the invoice creation? Well, invoices are created digitally and immediately tokenized on chain with cryptographic proof of authenticity. Smart contracts automatically verify invoice details, payment terms, and milestone completion. All data is immutable, transparent, and instantly accessible to authorized parties. Very important there, not just to anyone. So you can click on each of these tiles to see the comparison and more details. We're going to be adding to this website as the project unfolds. You can also see what's next here. We see this as a proving ground. This is a reference case. It's not just a product that we're creating here. Is going to be more than that, because many other products will be created on the back of something like this. So well worth keeping an eye out on. And just to be friendly to everyone, we've also got this in dark and light mode, so you can switch between the two. And then next, we're going to show you what some of the other use cases are doing. Finally, I just wanted to show you back on Project Acacia, where you can see all of the different use cases that we've been collecting. What is going to happen is that, like in previous years, the Digital Finance CRC, DFCRC, they will have on their website, hopefully soon, after gathering some more information, all of the different use cases with nice summaries of each. Because we don't have that, we've had to rely on what the news reports have said, what each of the groups have also pushed out in terms of their announcements. And we've collected that here on the defi.org.au or AusDefi Association website. You'll see here a menu. So the RBA Project Acacia, you can see a project overview of the phases, the project goals, even links to the original announcements. And as you can see here, we've got all the different participants. There's a filter here, so you can filter by all, by financial institutions, tech providers, even the regulators. If we look at all participants, so we've got the NotCentralised use case summarized here in terms of participants, the summary, the objectives, innovations and key features, etc. For others, where there is the information, we've collected as much as we can from the announcement. There's going to be much more when the DFCRC announces, so we will update this. But for now, here are the other ones that we can see. So we've got Canvas, who are doing an L2, a layer 2, and their use case overview is for tokenized fixed income and government bond settlement using blockchain. You can see the different participants they're working with as well. There's also Katina Digital, the Aussie dollar stablecoin. They're using it for tokenized asset settlement using the AUDM stablecoin. There's also the banks. So we've got Westpac here, token-based retail payments on existing digital apps. More details and summary there. You can see Commonwealth Bank of Australia also doing it for tokenized repo markets. And this is short-term funding and collateral and the different participants there. There is also ANZ, and they've got two use cases, one for tokenized fixed income, another for tokenized trade payables. Then we've got Australian Payments Plus. They have three use cases here. So interoperability with multiple digital money types, coordinated settlements services and frameworks to tokenize assets. And finally, they've also got it for using the NPP, the new payments platform for wholesale tokenized asset settlement. And you can see some more details there about the objectives, innovations, and key features and summary. And then it's the different other participators, including the Reserve Bank of Australia and DFCRC, who were the ones coordinating this pilot project. But it also involved the Australian Securities and Investment Commission, so ASIC, APRA as well, the Prudential Regulatory Authority, and Australian Treasury. So for more on that, you can check out the AusDeFi website here, and more news, more tiles and details will be shared over the coming weeks as more information comes to light. Thanks everyone for joining for another episode of FEX Insights podcast. I'm your host, Mark Monfort from NotCentralised. It's been a pleasure sharing all of these insights with you, and make sure that you stay tuned to watch out for the website. You can see more details here. So as mentioned, you can see here on the website that we will have all of the different episodes at fexinsights.netlify.app. So episode 8 was the latest one. You can see the other previous episodes here. And as you click to watch each of these, the key thing is that you can be watching, but at the same time, you can ask the AI some questions. So here we've got an FAQ that's being created on the back of that. And then you can also see other things that come out as well. So you can ask the AI questions. So I can say, tell me what were some of the key takeaways from this episode for someone who is new to crypto. Let's ask it that. Because we've got the transcript in there, it'll be able to understand and give in that context, in that level of understanding further details for you. So that's an innovative feature that we've got there. There's also a new education page. So if you're looking to learn about this space from different personas, so you might be in corporate strategy, you're a crypto native founder, you're an AI product manager, or even a TradFi executive, if you click on this, the different tiles will take that into account and will give you further learnings and insights. So what is blockchain really? We have different definitions beyond the hype, key concepts, real world analogies. All of this will be based on who you are, and what you can do there is ask further information about the content. So I can say, one of my favorite ones to ask is like, tell me more. Or you can even say E-like 5 is, because maybe that is too complex there above. You want it broken down even further. So all of this is available at the FEX Insights website. There's also a blog that you can check out, and much, much more. So check it out at fexinsights.netlify.app, and make sure that you like, share, and subscribe with this show. As we grow, we'll hopefully share with you more of the insights and education, and you will grow with us too. So see you next time for the next episode. Cheers.